We are right now witnessing something we have not seen since World War II by seeing on the news that Russia has invaded Ukraine. As Ukraine stands firm with roughly 360,000 troops against Russia's 900,000, we ask ourselves, what's going to happen? How long will this conflict last? Who will step up to help? And lastly, how will this conflict affect your real estate as a seller or buyer today? Привет, babushkas. Меня зовут Matthew Lama. For those of you who don't know, that means hello, grandmothers. My name is Matthew Lama with Jacobs & Company Real Estate, and today I'd like to share with you how the Russian invasion of Ukraine affects real estate and what not to do with your real estate during these times. All right, guys, again, this week we've seen on the news of Russia invading Ukraine, and there is a lot of concern geopolitically right now. We as a country are facing our own economic issues, and it'll be interesting to see how, as a nation, we navigate through all of this. We are already experiencing inflation that has significantly increased due to government stimulation and cheap money being printed and leveraged. We have COVID, which has rocked manufacturing and the supply chain. We have seen the great resignation occurring where individuals are leaving their stale jobs for other jobs that fit a little more for their desired lifestyles. We have wages that are not keeping up with inflation. And with all of this, we've got a huge conflict between Russia and Ukraine. How Russia and Ukraine affect us, or you as the daily consumer, you have to keep in mind that they hold some of the largest exports in the world. And just to name a few, you've got petroleum, which is gas, oil, and other products and materials. You have corn, and you have wheat. And where there's pressure on commodities such as these, there's potential of scarcity, which will drive prices higher. And with the already included inflation, we may be seeing prices continuing to rise. This hurts the everyday consumer by tightening up their everyday budget, and when looking at buying a home, it puts pressure on home buyers' affordability. Now, from this conflict, theoretically, investors may be reallocating their investments from a less volatile investment such as stocks to a more certain investment such as bonds in order to avoid losing money. And if this were to shift, the prices of those bonds go up and the yields or the interest rates fall. Now, keep in mind, between February and March of 2020, when COVID was just getting started, investors were pulling out their cash due to fear and the unknown, and I personally witnessed mortgage interest rates increasing from roughly 3.25% to nearly 5% in a matter of a couple weeks. Now, thankfully, our awesome government kicked in and rescued us all by buying back those bonds, thus reducing the rates. That was totally facetious. Today, though, the unknown is what will happen to the rates during this higher than usual inflation period and potential with an all-out war between the two countries. And to tell you the truth, I have no idea. For the everyday home seller or home buyer, here are a few things I would recommend not doing during this time. Number one, do not buy or sell real estate based on fear. Individuals who make their decisions on fear tend to make rash decisions by looking at the now rather than the later. And when dealing with one of the largest sales or purchases of your life, are you willing to risk your net wealth by what's going on with today's current events? Instead, let me sit down with you, get some additional data, ask questions, determine if selling or buying a home truly makes sense. Let's set up a plan and then execute on that plan. Number two, do not time the market. We don't know when the crisis of Russia and Ukraine will be resolved. We don't know when the inflation will level off or when the market will correct or adjust. Everyone wants to buy on the low and sell on the high in real estate, but I tell you, no one, including myself, can consistently time the market. I tell my clients, focus on two things. Does this transaction meet your lifestyle? And does this transaction meet your finances? If these are in check, then sell or buy your home. It's as simple as that. Also, keep in mind that if you're selling or buying a home, the finances are a little bit of a wash anyways, meaning that if you sell at a high and buy at a high, it kind of levels off. And vice versa. If you sell at a low, you're buying at a low, a little bit of a wash. In the grand scheme of things, we should be aware that we've seen abnormal appreciation in home values, and yes, it will eventually adjust or correct. But when your home averages 4 to 6% appreciation a year, and the fact that homeowners are typically going to stay in their home between 6 to 8 years, why are you focusing on time in the market if it's your primary home? Number three, don't buy stupid stuff. While our economy is based on consumer spending and borrowing, I want all y'all to hold off on your wants and focus on your needs when it comes to consumer spending. Right now, Russia and Ukraine will affect prices and other consumer goods, and inflation will continue. This is a good opportunity to focus on your budget, get rid of stupid debt, which is student loans, credit cards, and consumer loans, and build up your cash flow. If you focus on cash flow, you'll be able to afford more of a house and other expenditures, not to mention the possibility of buying an investment property. Instead, delay that instant gratification so down the road, you'll be in more of a comfortable position to buy all the things you want. Number 4, do not take out a home equity line of credit or a home equity loan. Full disclosure, this last one is a little bit more for the everyday homeowner, not the investor who leverages these tools. Homeowners, I know that many of you have anywhere from $50,000 to $400,000 in equity or more in your home. And for those of you who don't know, home equity is basically the value of your home minus the remaining mortgage balance. Now, hands down, this is super exciting, and it's a testimony of the hard work and the discipline of home ownership. However, history has a tendency of repeating itself, and if you were to look back in 2002 to 2006, when greed was filling the air, there was a rise in leveraging one's own home equity throughout the nation. Individuals were basically pulling out their equity and purchasing vacations, events, consumer goods, and products where there was no investment return. I don't want this to happen to you. And just because you have $200,000 in equity in your home doesn't mean you have to spend it. Right now, the housing market is booming, and now is not the time to be pulling your money out to spend it on stupid stuff, as mentioned before, because you will still have to pay the money back. And with Russia and Ukraine concerns, as well as inflation and other geopolitical issues that are going on right now, most likely the interest rate will be a little higher as well. Look, there's a lot that's going on right now, and it all impacts real estate. While being aware of current Russia and Ukraine events is important, do not let it distract you from your real estate goals. And if you're wondering if now is the time to either sell or buy a home, let's have a conversation in hopes to make a wise decision so that you get ahead in life. I invite you to reach out to me at matt.jacobsandco.com or call or text me at 703-489-3090. I'd love to connect with you and we explore your options today. Anyway, thank you all for watching. This is Matthew Lama with Jacobs & Company Real Estate. You take it easy.